Welcome to Fintech Confidential, bringing you the people, tech, and companies that change how you pay and get paid.
Our kids, they're going to look at us and be like, sorry, you used your account number? What is that? I say this advice a lot, and I think it's way easier to say than it is to do because fintech has more barriers to entry from a regulatory perspective. Don't spread yourself thin. Hone your first product. Not all revenue is a good idea. Good revenue will help you unlock product market fit. And the way that you get to scale.
I am super thrilled. I finally get to sit down with the legend, Stephany Kirkpatrick, the founder and CEO of Orum.
It's our 5-year birthday. That means we're just halfway to an overnight success. At Orum, we are a remote company and we use a fun little thing in our Slack called Donut. And it automatically randomly pairs you with somebody else in the company. So once a week, you have a 15-minute donut chat. And that actually started 5 years ago when we started figuring out how to build a remote-first company. The way that you send an ACH and the way a bank receives that is very different than the way you send a wire, which is very different than the way you do an RTP, which is also different than how you do FedNow. And it's gotten increasingly more complicated. I think in 5 to 10 years' time, when we move money, we will have data embedded in a way that today we don't.
Support provided by Skyflow. What if you could build fast but not break privacy? What if you could ensure data privacy, governance, and compliance with just a few API calls? What if you could worry less about PCI requirements while actually improving privacy and security? How much more time would your team have to truly innovate? How much faster could you build and ship new features? How much more powerful could your app be? Skyflow is a zero-trust data privacy vault delivered as an API. Skyflow's radically simple design lets you collect, secure, and tokenize personal information like card data and payment details. And with built-in features like encrypted data analysis and sharing, anonymization, and advanced governance, your days of choosing between data security and data usability are over. Whether you're just concerned with PCI compliance or need to go further to include CCPA, GDPR, SOC 2, and beyond, Skyflow has you covered. What if you could build fast but not break privacy? With Skyflow, you can. Visit skyflowsecure.com today to learn how.
Welcome to an episode of Fintech Confidential's Leaders One-on-One series, where I sit down with fintech leaders to uncover their stories behind their passion, their expertise, and their leadership. Today, I am super thrilled. I finally get to sit down with the legend, Stephany Kirkpatrick, the founder and CEO of Orum. They're a fintech that has been revolutionizing the way that money is getting moved and the way people look at it. Now, her journey is something that has not only been inspiring, but is extremely impressive. She's a daughter of an immigrant and has dedicated her career to helping those with less have more. Now, her entry into financial technology and fintech in general was becoming a certified financial planner. So hopefully she's got some good stock tips for me. She's also been found on Inc. Magazine's 2024 top 250 female founders. And also this year, she's celebrating the 5th anniversary of Orum. They founded in 2019 and they've been able to add reliability and speed to payments. But one of the things that I am just enamored by is the fact that you've been able to raise over $82 million in financing to drive this mission forward and building that infrastructure that really aims to maximize the financial potential of every American household. Today, we're going to dive into Orum. We're going to dive into some leadership lessons from Stephany, from building this from the ground up. And well, Stephany, I want to welcome you to the show.
Well, thank you so much for having me. I'm excited to be here. And I love digging into all the topics we're about to talk about, but especially for those that are listening, as you mentioned that it's our 5-year birthday, that means we're just halfway to an overnight success.
Oh, well, yesterday we had the opportunity to sit down and have some great donuts at Donutique yesterday.
We did. And what else did we get to do?
Oh, yeah. Yep.
Matching outfits.
We got the matching outfits today going on. So we really, one of the things that I thought was really interesting, and I didn't realize this until I started doing even more research, is the Donutique piece of it. Was that inspired by your donut meetings at the office, or was it the other way around?
That's a very good question. So let's back up and I'll give you a little bit of context and history. So for those that are listening, I'm Stephany. I'm the founder and CEO of a company called Orum, and I'm so thrilled to be here today. Orum transforms payment technology for businesses. We do that by revolutionizing payment speed, payment certainty, and payment orchestration. And that's all done via our unified API-based solutions. And we'll talk more about what all that means. But yes, at Orum, we are a remote company and we use a fun little thing in our Slack called Donut. And it automatically randomly pairs you with somebody else in the company. So once a week, you have a 15-minute donut chat. And that actually started 5 years ago when we started figuring out how to build a remote first company. We raised institutional capital in the spring of 2020. I was barefoot in my 5-year-old's bedroom, and every other VC out there was also sitting at home somewhere figuring out how this was all going to work. So that's the genesis of Donuts at Work. Here in Money 2020, using Donutique to build the Orum Cafe. First of all, credit to our brilliant leader, Greg, who runs commercial at Orum. But we do that because we want to have a really rich emotional connection with our customers, our prospects, our financial partners, and everybody's here looking for something that's during the middle of the day, not alcohol. They're looking for a way to connect, unwind, be joyful. And I don't know, I couldn't think of a lot of better things besides donuts to bring that to life.
So we talked about, starting as a certified financial planner. You've had a couple detours of a little bit of fun in the middle. Help us understand, how did you go from the financial planner space? You spent some time at a SoulCycle.
I did do that, yes.
And then Orum. Like, help us understand that not so linear path.
Yes, the journey's not entirely obvious. And I bet for a lot of entrepreneurs, this is true. I did start my career as a certified financial planner. And as you said, I am the daughter of an immigrant who came to the US with nothing. And most of my life was colored by understanding what it's like to have to decide which bill to pay, or what it's like to wait sometimes weeks, months for receivables to come into the small business that my parents were running. And just really colored the way I think about the impact I want to have in my career. So I became a CFP and actually started focused in the advice ecosystem. So how do we help others who have less, have more? Initially, that was for retirement planning. And then ultimately, that was for financial planning broadly. And I was very fortunate to work in a technology role that allowed me to not just think about the impact to people, but the scale technology could provide to providing financial advice. And while I was at LearnVest, building what became the sort of IP for the company, so I'm the principal inventor and patent holder for the intellectual property we created, I had this really big aha, which is you can get financial advice to the masses now. And you can get people excited to save and invest even small amounts of money. But what they're challenged by isn't behavior change. They're challenged by a fundamental flaw in the infrastructure that serves financial services. And so people would look you in the eye and say, I'd love to put money in a high yield savings, but I can't because if I need to move it back to my checking account on a Saturday, if I have an emergency, I can't get there fast enough. And it's heartbreaking to think that $2 trillion sits idle in checking accounts for consumers, let alone what happens in businesses that could be optimized to build wealth, to generate savings. And so my insight was derived from being a financial planner. And that is why I ultimately built Orum, so that we could build infrastructure that's going to fundamentally change financial services. But yes, there was a left turn and I went to SoulCycle because as I thought about my career, and I hope for those listening, this resonates, I realized that I'd really only done two things. I'd done digital, and that was powerful at the time, and I'd done financial advice, but I'd never touched the supply chain, hardware, physical goods. I'd never understood what it's like to run a brick and mortar business. And so when I was leaving Fintech for a minute, I was looking for three things. One, I wanted to be domiciled in New York City because I'd been doing a lot of travel. And actually before that, my real number one was I wanted to work for another female CEO. At LearnVest, I've been working for a female CEO. I wanted to find that again. I wanted to be domiciled in New York, and I wanted to work in a category I could get excited about. And so it led me to SoulCycle, taught me a lot. And as I turned the next corner to build Orum, a handful of folks that I built relationships with on the team and as partners through that experience ended up coming as early employees. And now a fair number of 2 members of the executive team and a couple other folks within the company are from the SoulCycle era, which is totally wild because we all were able to turn our curiosity into something that's now building an absolutely incredible new foundation for financial services.
What was that moment that like when you're at SoulCycle and you're ready to that decision point of
That's a big one.
I'm ready to take this next journey. I'm ready to solve this problem of money movement. What was that like?
Well, it was certainly an interesting moment in time because I had always kind of seen myself as a great number 2. And I imagine a lot of people can appreciate the feeling of imposter syndrome thinking, I'm not a founder. I'm not really going to go start a company by myself. And I am not only a female founder, which, realistically does mean that there's less venture capital available, but I'm also a non-technical founder. So my biggest hurdle to overcome was I don't write code myself. I can think technically, but my strengths are in commercial and go-to-market and product and other things. So it was intimidating. And what really pushed me was somebody saying, this is a worth building idea. And if you want to continue to have impact, and I kind of went back to my roots, in financial advice, we could reach millions of Americans by building infrastructure that powers the way money moves. You can reach hundreds of millions of American wallets, businesses, and consumers. And that is what ultimately tipped me to say, imposter syndrome, you go back in a box. I'll get a coach for that, which I did. And I love my coach. And I took the leap of faith. That said, I really encourage folks who are kind of at the precipice of thinking about founding a company to consider 3 things. One is, are you set up financially to stop getting a paycheck? Like, do you have an emergency savings? Are you ready to go out and do 6, 9, 12 months without drawing a salary? Because that may be what it takes. I think being financially prepared is really important. Number 2, are you thinking about something that you want to spend 10 years on? Right? We're 5 years into Orum and people are just starting to know who Orum is. By the time you hear of a successful company, they're 10 years in. And so if your idea doesn't compel you, then you're going to find yourself really struggling. And the third, and I think really important thing is there venture scale? You mentioned how much money we've raised. I'm very proud of that. It's also terrifying to think about the expectations to return that money, not times 2, not times 3. People want exponential returns. And the reason I'm convicted that Orum is venture scale is because when you think about money movement, which last year there was $80 trillion moved via ACH, our 50-year-old workhorse system. 1% of all money movement was on the new real-time systems. If you think about transforming payment technology for businesses, the impact of taking that 80 trillion and making it faster, smarter, data rich, it's 6 times bigger than Visa's global business last year. That's how I know that it's a venture backable, scalable thing. And it is sometimes slow and sometimes hard because we work in a regulated space, but it is infinitely worth it. And it will drive me for another 10 years, if not longer.
Hey, Ted Huff here. Ever thought about how you could streamline your application and underwriting process? Well, let me introduce you to Under. Why keep using the outdated methods of PDFs when you can digitize them effortlessly? All you gotta do is upload the PDF, send it out for digital signature, and voila, you're set for the digital age. Are you curious on how to make that happen? Head over to under.io/FTC and get started for free. It's really that simple.
You've talked about the impact to the consumer wallet. You've talked about infrastructure. Help us understand who is the target that you're trying to serve directly.
Well, let's break it down into products, and then we'll talk about who uses those products. So today, under our unified API solutions, we have one product called Deliver, which is our unique direct-to-Fed money movement API. It moves money 24/7, 365. And it's got RTP, FedNow, ACH, same-day ACH, wires, and new Visa Direct products in it. so that you can use a simple solution to actually think about payment optimization and payment orchestration, right? So we can do things like offer bank rate pricing because we work directly with the Federal Reserve Bank, right? We don't go through layers and layers of technology with other folks. We do every available processing window. So we speed up the time that money is available to move, and we optimize when businesses want to move money fast or slow, depending on what they're solving for. And then we offer something really unique, which is that you can track transfers down to the penny in our portal. So you can settle, reconcile, and always know where the transfer or the dollars are at any given time. And folks love our products because they can integrate in 2 weeks or less. So understanding kind of how we operate is important because then we can talk about who buys it. Let me tell you a little bit about Verify, and then we'll come back to the buyer. Verify was born out of our business customers telling us over and over again that bank account verification is a broken solution that they aren't able to use because in the business world, folks that run P&Ls don't have the banking login to use something like Plaid or an aggregator. And they don't want to think about whether or not it's 2:00 on Friday before a nacho window cutoff, right? They just know they need to pay suppliers and pay vendors and make payroll. And so Verify allows us to take what we built in Deliver and actually take advantage of building on top of, not just using money movement, but building on top of faster payment systems like RTP and FedNow to communicate in the real-time networks about the account status. So we check the status, we check if the owner is engaged, and then we can confirm whether or not the name on the account matches. So when you put those two things together, you have payment speed and payment certainty. Now, we spend a lot of time in lending and billing. And the reason for that is because those are two places where you find the problem that I call time to money, right? There is a reason why having faster and 24/7 availability of money movement is really critical, right? So in lending, issuing the loan to the lendee, the recipient of funds, shouldn't be gated to 9 to 5 on Monday. That's just not how the world works anymore. And there's so many iterations of lending, for example, that are in B2B where the magnitude of impact to move funds quickly is very meaningful. And on the accounts payable and receivable side in billing, we see the same thing, right? There's an objective to better align payables and receivables and not have to send out, with 3 to 7 days lead time, a payment that's no longer going to sit in your account and earn interest. You can actually maximize both the way you think about the interest rates you're accumulating, the dollars that you have in the bank, the time in which you make payables. And so much of financial services looks different when you don't have to ask the question, how fast or how am I going to move money? And you can just simply say it needs to be instant and we'll take care of the rest.
That really comes into the point of really looking at with the cash flow management side of the house.
Mm-hmm.
Like how do I maximize the usage of it? How do I get it to where I need to be? You hit on all of those different things. But as I want to drill back in, we've talked about the products, right? We're verifying the bank accounts, we're moving the money, all is well. And you've also mentioned that it's developer centric.
Indeed, it is.
So who are these developers that are looking at these APIs to do this? And where's it getting injected into the ecosystem?
Well, the thing to think about is that there's really 3 constituents, right? There's the buyer, which is typically somebody in a product role who is thinking about having a payment experience or a money movement experience embedded in their products and solutions. And so that's the person that typically comes to the table, finds Orum, and is analyzing how to bring something new into their product suite so that it can be differentiated, so they can lower cost. There's a number of things they're solving for. The person that buys the products also has to align with the person that's going to integrate. And so, yes, we are developer friendly. However, we also offer no code options because many financial services companies who are not fintechs, right, where a lot of the concentration of lending and billing sits, are spitting out a notcha file, and that's all they have. And they're probably not going to invest in technical change. So we can take that notcha file in our no code option and actually break apart all the components of the information supplied and route it on faster payments. So we're not only interoperable with RTP and FedNow, we're also configurable in a way that doesn't require engineering work. But if there are engineers, we want those constituents to be excited that they can literally build an integration to Orum and set up a full multi-bank, multi-rail payment stack in 2 weeks or less. And then the third constituent is what I call the user, which is somebody who has to track, settle, reconcile, organize, run reports, think about the treasury and payment operations components of having payments embedded in a business. And at the end of the day, that person becomes infinitely more important as you look ahead to what's on your roadmap, how you're going to do renewals, right? So it's not just the buyer and the process up front, but it's really for us deeply embedding with our customers, listening to their feedback, and ensuring that all three constituents have maximized the time and the effort they spend and have gotten something really valuable that they can ideally point back to the business and say, we've cut costs because we have bank rate pricing. We've identified a new way to monetize with faster payments. And oh, by the way, we were able to move engineers out from underneath managing 3 or 4 different bank integrations to new projects that generate growth for the business. And we did all that without changing, in fact, enhancing the way we move money. And so for me, that's exactly the combination we're looking for.
So all of it sounds fantastic, but we know that none of this stuff goes super smooth.
Well, you say that, but you haven't integrated to Orum. So, bring it on.
But I mean, talking about all the different legacy rails and some of the newer rails, even though they're newer, they still have a lot of the same baggage as the legacy platforms and a lot of the different ways that it's looked at and managed. And especially when you start thinking the bank risk side of the house, they still want to treat it similarly to the legacy pieces. What would you say was the biggest gotcha that you had when you were going through the process of putting all these different pieces together, something that you didn't expect to be as complicated or as difficult as it turned out to be? And then we'll start there.
I mean, there's been many surprises. I think all entrepreneurs would tell you the way they think it's going to go and the way it goes are different. Specific to your question, though, I think that's what's been probably most interesting. And you're very right? The way that you send an ACH and the way a bank receives that is very different than the way you send a wire, which is very different than the way you do an RTP, which is also different than how you do FedNow. And it's gotten increasingly more complicated. And so the fact that we've spent many years building the logic to think about the smartest, best way to move the transaction, and we've optimized for payment rails that are very nascent, right? There's very, very minimal utilization still of the newer systems, not because they're not valuable, but because it is a sea change to move 11,500 financial institutions from one way of working to another. So right now, the RTP network's reporting about 1 million transactions a day. So about 30 million transactions a month. So you can imagine that being first movers on a system that itself hasn't matured has taught us a lot. Like, what happens if there's an outage? Is there an outage at the RTP level or is it at the bank level? How do you know if the account you want to interact with is actually eligible for an instant payment? Well, that's why we built Verify. So there's been a lot of learnings just around incorporating the actual specific mechanics. And right now, I would say, yes, we are all seeing the benefits of faster payments. What we're not realizing yet is all the things that the Fed built into FedNow and TCH built into RTP, which is the messaging layer. And so as we're going to talk crystal ball later, but as I look ahead, I think that's a very important part. It's fun and sexy to talk about faster. It's really important to talk about 7 days a week with no holidays and 24/7. But what becomes critical is the combination of moving money with data. And that's why I think these networks are absolutely the future. When I talk about kind of the sea change that's happening, I often think about, well, how long ago was it that Uber started to hit the market? And if before Uber, I said to you like, hey, Ted, it's going to be completely normal to have a stranger in a strange car that you've never been in, pick you up at your house, have your phone number and know where you live and drive you somewhere. You would have thought that was absolutely bananas. Yeah. And now it is the most common, best way. I mean, I don't know what's happening in the rental car market, but it can't be pretty, right? Because Uber's really just made it so simple. And I think that's what's happening, but that was 10, 15 years ago, right? Mm. So you've got to kind of think about, as we're changing things, the benefits are very obvious. And we're going to continue to push boundaries. It's why we spend so much time partnering with TCH and with the Fed. And We're going to keep making sure distribution and access is easy. Today, you have to go to a bank. That bank has to have APIs if you're lucky. There's a select few. Jamie Dimon funds a very rich technology budget because he can. Not that many banks have that.
Very true.
And so we want to be the partner that allows access in a really simple way so that businesses who are building something can take advantage of the ways in which you can optimize money movement. And they don't have to go spend $2 million in 2 years figuring out how it works. That's my job.
Well, and you talk about the optimization. You know, one of the discussions that I've had a couple times as we look at the faster payments and we look at the push to card functionalities and, you know, when do we fall back on ACH and all these different decision points in here to try and figure out what's the best way. What has Orum done to help those folks that are sitting on the other side trying to figure out, how do I get it there now? How do I get it there later today? Like, how are you helping them make the decisions of, do they have to figure out what they're going to use?
They actually don't. That's the beauty of it. So think about Amazon, right? Same day delivery. Your packages now literally come Saturday and Sunday. And sometimes they come between like 5 and 7 a.m. Like you have so many ways in which you can get a package. And what Amazon did is they took FedEx, UPS, Postal Service. Oh, by the way, they put their blue van, little Trojan horse out there. And then they hired a bunch of drivers to like close the loop on final mile. And as a consumer, all you care about is whether or not the package is going to arrive on time and how certain, it's like how fast and how certain. That's how we should be thinking about money movement. It's my job as we build Orum to think about what are the rules that live within each of the networks and what can you definitely do and definitely not do. When can you reverse a transaction? What if you send a payroll file and it's got an error? Well, ACH lets you like fix that, but RTP doesn't. So you're not just optimizing for speed. You're thinking about size of transaction, who's sending, who's receiving, what time of day is it? What's the like purpose of the transfer? Have we had confirmation from the payee that they know the money's coming? I mean, there's many, many things that you're optimizing for. And via our API or our no-code option, it is as simple as saying ASAP if speed is important to you, and we will do the rest. So orchestration is a big part of our business because nobody wants to have to build the decisions that go into increasing complexity of managing risk, speed, cost, or reversibility. And the rule book for Nacha is, I don't know how many pages. It sits on my desk. It's, 5 inches thick. That's the kind of stuff you have. It used to be bigger, right? They've like worked on it. So unless you have a chat bot with AI, like scanning that and telling you the answer to everything, which certainly is not the case, you have to really fundamentally know how to operate every network differently. And I just think it's too high of a barrier of entry and too high cost for every single financial services company to have to try to figure that out. And that's exactly why we've done what we've done and the way we think about.
I'm curious to get your perspective. I've sat down and worked with a number of treasury management professionals, and a lot of times it's less about the speed and the ease and more about the cost and, as you called it, certainty of delivery. How are you delivering the understanding of lowest cost for the certainty of delivery within a certain time?
Now let's quickly shine a spotlight on a game changer in the financial world, ClearingWorks. Simplify your financial management with a one-stop solution for all your AR needs and with a single login. Are you intrigued? Visit clearingworks.com to schedule your demo today.
It's such an interesting question because in treasury management, you're often working with corporate funds. So you're sometimes asking and answering different questions than you might be within the rest of the business where you might be handling your customers' funds. So I do think that sometimes there's a differentiation between those two. I think cost is pretty transparent, right? We offer bank rate pricing, which means the way that we determine pricing is to coordinate with our financial partners and the Fed in particular and TCH. And so what we're not trying to do is obscure and hide costs. What we are trying to do is make sure that there's value and people can understand if you want it faster, it takes a little bit more time and money to make that happen. And so as we've made that investment in the faster payment system, it's a couple cents more than an ACH. But here's what's great about it. It travels with data. It's certain. It works at night and on the holidays. So people are willing to pay for that certainty. And in other cases, as you mentioned, sometimes you want to slow down one leg of the transaction. Like you want to let it settle, hang out in your account for a day or two, maybe a week. And that's the beauty of our system is you can break up your debits and credits and you can think about them very differently. So we're thinking about optimizing exactly what treasury managers, payment operations leaders, and business folks need to think about. So it's not just move it faster, right? It's really a very complex equation of optimization and orchestration.
So recently, you've made a couple announcements for some partnerships. Help us understand what drives those types of partnerships. One I believe is with a bank, and like how do you choose the partnerships? I mean, at a leadership level, how do you all come together and go, yeah, that's the right partnership for us?
Well, we're very careful and selective about who we partner with. So I'll start with that. Having grown up in regulated financial services my whole career, I know and I knew when I started Orum that we needed to make very careful choices because we wouldn't get a second chance. And when you're establishing a brand and you're establishing trust with your customers, it's easy to have a great website. It's easy to have great products. And the minute something goes wrong, it's very easy to have a customer say, I don't want to work with you anymore. Mm-hmm. And so our partners are very much an important part of thinking about our SLAs, how fast, how long, how's our uptime. And they're also really critical in terms of how they're regulated, where they spend time in the market. You are the company you keep, right? So we want a select group of partners that are premium in every way, because it is important to us that we don't make any decisions that could risk the way somebody's trust gets built with us, because moving money is the most high value, high risk endeavor you could take on, because we're talking about payroll. We're talking about wages. We're talking about insurance dollars. We're talking about healthcare providers getting paid, mm-hmm. right? And I just take that very seriously, and that's colored everything we do from a partnerships perspective.
I'm not going to go all the way into our crystal ball. We'll end with that piece of it, but I do want to understand your perspective on how the future of payments, the future of fintech is getting impacted by the regulatory environment. As you mentioned, you came from a highly regulated environment to begin with. How are you seeing the announcements? Recently, we just had the announcement of 1033. It finally got released. How are you seeing things like that impacting the way in which people approach these products?
Well, regulation is sometimes on your side and sometimes a little bit more of a headwind. And it sort of depends on the political environment, what regulator, what part of the landscape you're in. What I think is particularly interesting right now is that many different types of regulators, not exclusively the CFPB who put out 1033, are endeavoring to figure out how to increase certainty and manage risk between novel, innovative concepts being built by fintechs and the banking system that supports their ability to do a lot of that, whether it's hold deposits or transfer money and issue credit cards. So I think we're still in the early innings of what will be probably a fairly big amount of regulatory sea change, but those regulators don't always have to coordinate efforts, and they certainly probably won't. With 1033 specifically, I think it's a double click into something that's existed for a while unofficially, which is, hey, at this bank where I've put my trust and my dollars and probably my direct deposit for my payroll, I have data locked up. And for a variety of reasons, I might want to give that information to somebody else. Maybe it's for buying a car and getting a loan, and there's cash flow based underwriting information that would prove that I pay my bills on time and be additive to my credit score. So I think it's an unlock that is going to, in this case, be a propellant to have more consumer rights. And that's what the CFPB is always thinking about with regard to access to data. I think we're probably going to be looking at things evolving like Reg E, which is specifically for ACH and ACH debit transactions, potentially needing to evolve because it's highly abused and it leads to a substantial amount of fraud and cost in the payment system. So I'm interested to see where all of this goes. And I'm by no means a regulatory affairs expert. But we do ensure that we spend a lot of time with our counsel at Paul Hastings, Chris Daniel, and team, keeping current and making sure that we're in lockstep with our financial partners, their regulators, which spans everything from the OCC to the FDIC and beyond, and just really putting in the work to work with the system and not against it.
Yeah, I was really wanting to understand, like, how are you seeing it in the beneficial, not the detrimental side, but the beneficial? How are you seeing that moving Orum and the technology forward? Is it opening up new opportunities? Is it in a direction that is helping you see things maybe in a slightly different way that you thought may not have been possible?
You know, I'm always eager to see how we react to final regs. And so, this was a particularly fast moving set of regulations. There are others that are being worked on now that won't maybe move as quickly. I think Rohit had a timeline and an objective and a really clear remit to get this done.
Yeah.
And I think it's broadly going to open up access. So I see it as a, generally a positive thing. I'm interested to see, as the crypto landscape evolves and stable coins.
You sure you're not reading my notes? Because that's where I'm going next.
I'm certainly not, but we're sharing a brain, Ted. I love it. There's so much of value to be had in stable coins. And so I'm very interested to see how, let's say like the FDIC and SEC start to rethink some of their initial concerns with crypto and how we can take advantage of the blockchain capability and the sort of stablecoin assets. I wouldn't be surprised if there's a future state in which a stablecoin is a part of the Orum backend. I don't know when that might be, but it's not crazy, right? Particularly for things like cross-border. So it's just a very interesting time. And in every moment when it feels chaotic because regulators are feeling a certain way, it just means there's opportunity.
So we'll go ahead and make that shift over to, the discussion of, when you're looking at all these different technologies. I mean, we've had the discussions throughout the industry, off and on and up and down, and everything kind of ebbs and flows as it normally does. But when we look at any sort of cryptocurrency, any sort of blockchain technologies, you just mentioned that you see stablecoin as being a potential item that gets added or gets used more frequently. But what do you see the overarching impact of these blockchain technologies to the industry and how you all are looking at approaching the market?
Well, the blockchain piece in particular is super interesting. I think especially if you are looking at folks like what Figure is building from a HELOC perspective. So if you're getting a home equity line of credit, the way they're thinking about the sort of provenance of information within the loan itself, that is a big game changer from an infrastructure perspective to think about where lending might go. Stablecoins are interesting because, I can see a future in which we factor them in, and probably we're not done innovating on ways to move money. I don't think FedNow and RTP were like the last frontier. I think what is true is that inside the US, currently, the need for stablecoins as a form of money movement is lesser because we're lucky to have the US dollar be stable and reliable. And where you see stablecoins being really valuable is speed of money movement cross-border and or currency stabilization, and providing the ability for people to hold USD who live outside the US. So that's not on our horizon today to go cross-border because I can only see so far into the future. And with $80 trillion needing to go from ACH to fully optimized, I got years and years of work ahead of me. But we believe that as new forms of money movement become relevant to our use cases, we'll just build them in. And like we did last year with FedNow, we added it. None of our customers had to make any changes to take advantage of it. And we just automatically incorporated it into the waterfall of logic. And that's what we'll continue to do as there are more types of different payment mechanisms. And I sure hope we're not done innovating. We're just at the very beginning, I think.
I do want to jump into really understanding some of the leadership lessons that you've learned during this. You'd mentioned, getting the coach and really kind of working through that I'm a great number two piece of it. What would you say are like the top three things that you've pulled out of it from your transition through each one of these roles? And heck, even over the last 5 years.
I've learned so much. So let's start with having a coach, right? I think sometimes, particularly startup founders, find it unusual. Like, what would you do with a coach? And like, how does it work? And if you look at the best athletes, Tiger Woods, name whoever you want, right? They all train. They all work to be better at the thing they're good at. And as a leader, you're never done working on the things that will make you a great leader, because the business you're running is going to change, if not every 6 months, every 9 or 12 or 18, because you're growing. And so I think having a coach that is versed in leadership and specifically, in many cases, the entrepreneurial journey is a massive unlock. I've been working with my coach, Steve, for the better part of 3.5, almost 4 years. So not since day one. And I wish I had known him on day one. I think I would have made a lot of decisions differently. So coaching is really important to me. And I recommend it to all entrepreneurs because that person is fully independent. They don't have a financial outcome based on equity, and they're not married to you, and they're not your mom, and they're not on your team, and they can really be objective and be looking out just for you. And I've learned a lot about board management, about how I handle my imposter syndrome, about just continuing to put in the work. And some of the best things that have come out of that is that I'm a better listener, and I'm more patient, and I ask questions without questioning the person. And so many things that I will continue to work on, but I'm really excited, have become natural as I've just put in the work. Number 2, I have a 911 list. Like, I by no means know all the answers. I mean, when I took a left turn and went to build bikes that go nowhere, I did not know anything about the business. So I had to ask a lot of people for a lot of help. And your network's a really valuable asset, and people love when you call on them for their expertise. So build a 911 list of people that will have seen around the corner. They know what's next. They have the domain knowledge. They've been in your shoes, but they've done it twice before and you haven't. And I just find that is one of the most powerful things. One day I was trying to study a problem about how do ATM machines, when you put your debit card in, know that it's your bank account. And so I was like, I need to find the answer. And of course I wouldn't know. So you can only Google so much. So I called on my 911 list and somebody said, hey, meet this person. They run the biggest ATM network in the country, and they'll answer your question. And that's so satisfying because it speeds up my ability to find the answer. And for that person that I'm asking, they're delighted to tell you and help you out, right? Give and you will get back. And then I think the third leadership component that I talk a lot about is a team is not a family. Orum is not my family. I love Orum. I love working with the team. But teams are very different. Family, you would do anything for. You would make room for anyone. You would bend over backwards. You just behave very differently when you think you're a family. And a family makes it sometimes too personal. This is business. I run a company. It is a for-profit entity. We need to make money. I need to be smart about the bottom line. And decisions we have to make sometimes are really hard. Sometimes it's not working with a teammate. That doesn't make them a bad person. It just means it's not a fit right now. And the more as an employee you can see yourself as on the team, you can remember you have to earn your spot on that team. You have to play your spot well. You got to stay in your spot. And if something changes and you don't like it, it's not personal. So having that mindset that we're connected and a team is a very powerful force of nature is so important to me. But remembering every day, it's not a family. And when I have to make hard decisions, or managers and people leaders have to make hard decisions, we don't want it to be about that familial component. And I know it's a little bit controversial and a little bit different than how some people think about it. But that's worked really well for me.
How do you manage that, especially with having a full remote team?
The most common cause of bad customer experience isn't that high tech. It's embarrassingly simple. Yep, it's answering questions. In e-commerce, it's really easy to get bogged down with common questions, whether that's where's my package, how do I return or exchange this item, or just to cancel a subscription. SolvePath is an AI-driven customer support system that enhances the customer experience with visual formats and self-serve technology to empower your customers to handle their own support requests. Get the best customer support system for your business. Get SolvePath. Get started by visiting getsolvepath.com.
Compassion, empathy. Everybody's human. Somebody's going through a hard time. They're having a bad day. Somebody might have had a death in the family or be sick. You don't know everything about somebody at work just because they walk in the door. And you won't know everything about them, although you might know different things because you work in a remote setting. I tend to know more about people's home lives than I probably would have. We certainly see if somebody's like painted the wall or moved locations. You see people's kids. And having the compassion and empathy is critical. I think it's very important to check in. How are you doing? That's a different question than like you might normally get asked if you just walked in the door. So we do really think about employee experience, employee engagement. I think engagement's a great proxy. If you are engaged, that means that you understand what you're supposed to be doing. You're giving the autonomy to do it well, and you're getting feedback that it's going the way you thought it should. And if you're not getting those signals from your people leader, it is on you as an employee to go find out, hey, are we aligned? Here's how I'm thinking about it. Does that match? So, there's no shortage of challenges in remote, but there are some real benefits. And we've made this a feature, not a bug. And I think just ultimately having compassion and being professional in every setting is really critical.
How do you take that into the decision-making process on what to do, when to do it, how to do it, who needs to do it? Help us understand from your leadership perspective, how do you lead the people to do the right things at the right time with the right resources?
Well, two answers. One is I hired a VP of people when we were 20. So a lot of people do that when you're like 80 or 100 or 200. She was head of people at the time. She's since been promoted. And that is my way of investing in making sure that we make the right decisions to have the people at Orum be the right people at the right time for right now. And that's a nuanced thing because as the business changes, what we need changes. So I started with that. And then I come back to just thinking about, hey, if we're going to move in a new direction, launch a new product, build something different, hire a team, you have to kind of go back to first principles, which is to understand, do we have anybody already here that fits the bill? Do we need to hire from outside? Can we build a system that promotes from within? And I try to really take advantage of the talent base we've already developed who has subject matter expertise and domain knowledge and use that to our advantage. So you'll find that people at Orum sometimes move teams or they get promoted in a different area. And that's us taking advantage of really exceptional talent, but also realizing like when we don't know something and we do need to hire from outside, we know how to go find that. And so it's always a balance, but having somebody who really focuses on people strategy unlocks me to do what I'm good at, which is to think about having great financial partners, great commercial partners, great investors. And it unlocks her to ensure that the team is always, as best it can be, optimized to do the right work at the right time. So that means thinking about org design. It means thinking about employee growth. It means thinking about great people leaders. And so there's a lot for me that goes into it.
Well, I do want to dive in. And of course, I had to bring the crystal ball with me. But what I want you to do is I want you to look into this fun crystal ball here and tell us, what is it you see in the next 5 to 10 years in fintech, and how does it look different?
Oh man, that is a really wild question. So I think in 5 to 10 years time, as I said kind of earlier in the show, one of the biggest changes is that when we move money, which is an increasingly important part of fintech, we will have data embedded in a way that today we don't. We will be able to send an accounts payable or a receivable, invoice inside of the payment mechanism. So the kinds of software that need to get built that today are big businesses like Bill.com might look fundamentally different. They might not exist at all because the model will be changing. And I think the way you manufacture and distribute financial services products on new infrastructure is going to change in ways we almost can't imagine. But if you just go back to, if we only had data while we were doing a payment, what would we build? That is the unlock of taking faster payments from today, just being about speed or in some cases, time and day of the week, and really making it a transformational part of fintech. So I wish I could see further in the specifics, but I know that data with money movement is going to be the game changer for every fintech who might not need to do certain things the way they're doing them today. And certainly, I think our kids, so maybe not 10 years from now, but in the future, they're going to look at us and be like, sorry, you use your account number? What is that? They're going to pay with their email. They're going to pay with their phone number. And so the Zelle directory model, while still also early, is a great signal on the ease by which we're going to start to think about transacting, taking down barriers of entry, and ultimately also preventing bad actors from getting into the system. You know, it always made me laugh. Like, the most critical thing about your bank account, which is the account number, is printed on your check, which is literally a physical thing you could lose. Losing my debit card's way lower risk. I can just immediately say I lost it. Losing a blank check, much harder. So I just think we're going to go through so many kinds of changes, all tied back to data that can increase payment speed and payment certainty and help us build better.
If you were to give another fintech founder one piece of advice that they could, that's the only piece of advice they could take with them going forward, what would it be and why?
I say this advice a lot, and I think it's way easier to say than it is to do. Be very, very focused in the beginning, because fintech has more barriers to entry from a regulatory perspective, and because you have to meet certain criteria to be in financial services. Don't spread yourself thin. Hone your first product. If you're focused on selling to lenders, sell to 100 lenders before you sell to somebody that's not a lender. And just stay steadfast in working with your board in the fact that not all revenue is a good idea. Good revenue will help you unlock product market fit. And the way that you get to scale, like a Chime or a Cash App, is to be literally laser focused in your core customer and your core product for as absolutely long as you can, which means frequently saying no to the temptation to build more things faster. And I think that's where, in fintech in particular, you can get over your skis very quickly and not realize that you have too thin of a layer of compliance or not enough, support for something in the fraud ecosystem. And so those are the things that I really come back to over and over again, because I think it's what's going to make for the ability for you to quickly figure out, do I have product market fit? And if I do, then how do I start to scale it?
So that leads me to a different question. It's like, how do you know when you have a company, not a product or a feature?
Such a timely question, because so much of AI right now feels like features. And even, over the last 5 or 10 years, a lot of, tech things have become features, not companies. Go back to venture scale. Can you build a business with this that's going to get you to $200 to $300 million of revenue, at which point you could consider an IPO or an alternative exit? And when you're standing there proud of yourself getting to your first 1 or 2 million in run rate revenue, do the math. What do I have to believe on number of customers, on cost of acquisition, on, which incumbent might get there first? And be really mindful of how easy it might be to replicate the thing that you're working on. Because if that's true, it's likely a feature, not a business.
I've had this discussion. It was interesting. I was at another conference and we just started to see as I was sitting down with a handful of founders of their companies, and most of them are very deep. Like an Orum, you guys have a lot of function, a lot of feature, a lot of value gets provided. And that was the conversation that we were having, was realistically, 5 or 6 of these people that were presenting their company probably should just get together.
Yes.
And build a singular end-to-end product that can actually service, versus just being that one little piece. And the reason why I bring that up is you talked about getting super, super focused. And I think there are cases that you can get so focused that
right, the market's too small.
The market is just too small. No matter how much you think, well, everybody could use this. Well, yes, everybody could use this in this thing, in that thing, in this company, in this product, in this feature. And I think that's the biggest piece that I've been seeing over the last, I would say probably over the last 2 years, has been really bad.
I think you see a lot of that because of how capital was deployed. And so it's kind of very obvious right now, which means there's probably going to be some great consolidation. I'd also kind of add the finer point, which is if you can land with a wedge and in a year's time expand to another feature that's going to drive more revenue and lock in that customer, the way we think about that is bring all of your payment business to us and we'll continue to grow what we offer to you so that if you were already working on, let's say, ACH somewhere else and you wanted to start on RTP with us, you'd be incented to move everything over. It's a better system. So landing and expanding, increasing contract value, adding something like Verify, which we did almost 100% of our customers looked to us and said, oh, you've added a thing I wasn't able to solve on my own. I want to buy that. So it leverages you to charge more, own more share of wallet, increase net revenue retention. So those are the things that if you start narrow and focused, you should hear good signal on the necessity for your buyer to continue to work with you and buy more of the thing you're selling. And so for me, it often just comes down to monetization and consumption. And are you thinking about it from a growth perspective in the right way over time?
Stephany, I appreciate you sitting down today.
Me too.
Especially ending on that note. This has been very, very helpful to understand where Orum's going, how it fits, the different pieces and parts, especially the way that you've approached building out the organization. It's been very, very helpful, and I really appreciate your time today.
I loved being here. Thanks so much.
Thanks, Steph. And if you haven't already, go ahead, like, share, subscribe, and go to fintechconfidential.com and sign up to be notified when this and all the other favorite episodes get released.
As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, you know it's a complex battlefield. That's where Hawk's AI tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords. They're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to gethawkai.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media, with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.